is one confusion that is perhaps the most expensive confusion in personal finance. I'm going to clear that confusion because what we are going to talk about tonight is the difference between a very, very wealthy investor, successful investor, and someone who just throws money around. And this is why two people start off with the same amount of money, maybe $1,000, to invest in the stock market, for instance. Within 1, 2, 3, 4, 5 years, the outcomes of those two individuals are totally different because of this confusion that I'm going to explain tonight. And that confusion is between portfolio, stock portfolio, and stock collection. People think it's the same. It's not the same, and you're going to see in just a moment why it matters, why you need to build portfolio instead of collection, and why actually what you have might be collection and not portfolio. Because many people watching this, listening to this, don't have a stock portfolio. So the fact that you have stocks, the fact that you use an app which shows you every day the status of your stocks, the fact that you check your prices daily, doesn't mean that what you have is a portfolio. What most people have is a collection. Please type in the comment section so that we can set the basis. Type in the comment section, collection versus portfolio. Everybody, type it, collection versus portfolio. They are two different. I'm going to explain it. So a collection is like a drawer, like a shopping bag. You just have a list. Apple, Amazon, Okomu, whatever. You just have a list. But that's not portfolio. And one key difference that I'm going to say upfront is that a collection reacts to the market, but a portfolio is designed to survive the market. So yesterday I told you about stocks I bought 21 years ago. It wasn't a collection. It was actually part of a portfolio. So I've had a portfolio for 21 years. But that's very different from collection. You see, because a collection is based on hope. A collection hopes. You're just collecting this stock, buying this, you buy this one, this piece of this, buy this insurance stock, buy this banking stock, buy this manufacturing stock, buy this real estate investment trust stock. Just here and there, you are collecting, and you're just hoping that somehow you are going to hit the jackpot. That's a collection. But a portfolio plans. A portfolio doesn't hope. A collection hopes, but a portfolio plans. So type in the comment section, which would you rather have? Would you rather have a collection, or would you rather build a portfolio of stocks? Type it in there. Those two things will determine your financial destiny when it comes to investing in the stock market. In fact, investing in any asset, even real estate, even crypto. Like now, I am building a crypto portfolio, not collection. But many people start out building collections because they don't know the difference. So now, I want to use the opportunity to also introduce you to what we are doing for the very first time. So on the 28th of this month, you can see the details in the description section. We are going to have the stock portfolio masterclass. The stock portfolio masterclass. The details are in the comment section. Now, there are 5 reasons why you think you have a stock portfolio, but you don't. So let's go straight into it. Reason number 1. You bought stocks, but you didn't define a job for them. In the Financial Fitness Challenge, the very first thing you do is actually to set your expectations, to set goals, clear financial goals. You don't start by just buying stocks or buying land or investing in real estate or investing in mutual funds, investing in money market funds, investing in commercial papers. That's not how you start. You start by actually defining your investment objectives. Why are you investing? So a lot of people begin. They just hear, oh, this stock is hot. Such and such a stock is hot. And then they buy. They hear, oh, tantalizers is hot. Tantalizers might go up 10x in the next 2 years. They buy. So they're making collections. So, but why do you own each stock you own? Why do you own each stock you own? So that will tell you whether what you have is collection or portfolio. So I'll give you some personal example. One of my investment philosophies is to own everything I use, to own all the companies whose products and services I use. You see how portfolio, so I'm already going ahead of myself to show you the difference between portfolio and collection. So the reason you have collection and not portfolio is that each of the stocks you bought, you didn't give it an assignment. You didn't tell it exactly what is there to do in your life. So I decided that I was going to own the services and products of everything I use. That's how I came to buy my bank stocks. Because I use the banks every day. And then the banks have charges, transaction charges, and all kinds of charges every day, SMS charges, all kinds of things that the banks charge you. That is why you've never heard me complain about the bank charges. People complain, oh, this bank is charging me, this bank is charging me so much. How did they deduct it? I don't complain. Do you know why? Because every time they charge you, every time that bank, my bank charges you for their services, I earn money. I earn money. That's how you, that's a portfolio. So I don't just have the bank stocks because somebody said, oh, the banks are jumping, the bank stocks are going to do very well this year. No. That's not why I have it. I did the same thing for telecommunications because I use the phone every day and I use the data. I use the mobile data every day. So what did I do? I decided that instead of every day buying data, buying airtime, I was going to own the company. I want to own the company. And that's how I bought the telecom company that I use. So every year they pay dividends. And typically, the dividends they pay me for the year, takes care of all my phone calls and data needs. So you see how you begin to see the difference. So I didn't just say, oh, MTN is a very solid company, so you go buy MTN. No. I use their service and products. So I want to own the company so that anytime I use their product, I also make money. And anytime you use it, I make money. So every time you buy airtime, every time you buy data, I become rich. I make money out of it. So you bought stocks, but you never defined a job for them. So why do you own each stock you own? You need to know. Not the story you heard, not YouTube video that you watch, not some influencer saying, oh, this is a good stock. What job is that stock doing in your life? That's a good question. And I'd like everybody to type it in the comment section. Type it, because I like you to reflect it. Usually during these sessions, I want this sort of feedback. I want to see the comment section scrolling and moving so that I will know that it's actually a coaching session. It's not just me, talking like I'm talking on television. So type it in the comment section, okay? What job is that stock doing in my life? What job does every stock? So every stock I have has a job. I have stocks that I don't intend to sell till I exit the planet. I have stocks I don't intend to sell. I have stocks that I intend to still be feeding my family, taking care of my grandchildren, great-grandchildren in another 50, 100 years. I have stocks like that. So you are beginning to see that portfolio planning is not a casual thing. and that is a very, very critical competence when it comes to building wealth. This is what you're going to learn, the mechanics during the masterclass that is coming up shortly. The details are all in the description section. So a portfolio is not about what you own. And so if you can't say what job the stock is doing in your life, if you can't answer it, then it's a red flag. Okay, Bube said, this is my aha moment, because the same thoughts I was having about the reason to buy into Sterling Bank, and now you are discussing it. Exactly. That's how you think about portfolio. If you can't answer that question, what a stock is doing in your life, it's a red flag. And that is also why people lose money in the stock market. And then they say, oh, the stock market is not it's not good. The stock market is a scam. I'm not making. Who told you? It's because you don't know what you're doing. If you put money in anything you don't understand, you will lose it. That's how some of you bought into Assor Savings Home. You bought into a company that was literally dead. A company whose debt to what is it now? Debt to revenue or debt to something ratio was like almost twice. And then you bought into that. You didn't ask yourself, what is the Assor Home Savings doing in your life? And you bought into a dead company. And now their license has been withdrawn, and then they have also been suspended from trading in the floor of the Securities and Exchange Commission of the stock market. And so many people lost tens of millions because they didn't first of all ask, what is this stock doing in my life? They're just buying because somebody said, oh, the price may increase, the price may double, then you buy. No, that's not what you do. So a portfolio is not about what you own, it's about what role each of your stocks is playing in your life. So you think about it like a football team, actually, because some of us here in this part of the world, you are soccer lovers, and so you have to think about your stocks like a football team. So you don't pick 11 strikers, do you? Football lovers, tell me, do you pick, there are 11 people playing in the team. Do you just wake up and pick 11 strikers? Everybody is striker. And then just hope that all works out. Imagine a team, you're going to play a professional team, and then they choose all strikers, 11 strikers, just hoping that things will work out. No, it doesn't happen that way. At least for those of you who love football, you know you are going to need defenders, you are going to need midfielders, you are going to need a goalkeeper. But you take 11 strikers. Okay, since they are strikers, you score more goals. Are you going to score more goals? Are you really going to win? There's no goalkeeper. You don't have defenders. So most people's portfolio is 11 strikers chasing goals and nobody protecting the downside. So here's the truth. If you don't know whether a stock is meant for growth, or whether it's meant for income, or whether it's meant for stability, or whether it's meant for hedging a risk or long-term compounding, then it is simply unemployed capital. Type it in the comment section. Unemployed capital. Everybody. I need everybody to follow. When I tell you to do that, just go ahead and do it. There's something it does to your nervous system. So it's unemployed capital. That's what it is. If you just buy stocks and you can't say, is this growth? Is this income? Is this stability? Is it dividends? Is it hedging a particular kind of risk? Or is this for long-term compounding? Then it is unemployed capital. Exactly. So many of us are struggling financially, even though we earn income, even though we invest, like Coach Obo says you should invest, you're investing, but you're still struggling. Why? Because you're suffering the effects of unemployed capital. And you see, unemployed money creates anxiety. That's also why you see that the stock market is a source of anxiety for so many people, because they do not understand the delicate science of building a portfolio. They are building collections. So this is why some people panic when there's a small market dip, like we've been having a dip since November, late October, November, and then December. And then a lot of people are panicking. They have anxiety. But there are people like myself, who are sleeping peacefully. You see, because panic isn't about the volatility in the market. It's about unclear purpose. When you're panicking because you don't have unclear purpose. And the same thing is happening in the crypto market. It's horrible. Yesterday, there was a massive crash in the market. Bitcoin, I don't have the particular numbers, but it went from something like $86,000 all the way to about 92. Then within 1 hour of going to 92, because some people already thought, oh, it's pumping. Within 1 hour of going to 92 or something like that, it crashed again, way down to about 80, 82, wiping out a lot of liquidity. But while some people are having anxiety, those who know what they are doing are sleeping peacefully. Because when that thing happened, it opened the window of incredible buying opportunities. You saw some pretty crypto prices for solid blue chip cryptos. And that was a very good entry point. So when you are having anxiety about what's going on in the stock market, it's not about the volatility. It's because your purpose is not clear, okay? It's because of unclear purpose. So hold that thought right now, because it connects directly to reason number 2. So what is reason number 2? Why you think you have a portfolio, a stock portfolio, but you don't. Reason number 2, you confuse diversification with having many stocks. Having many stocks. So when you have, somebody says, okay, I have 500,000 naira to invest in the Nigerian stock market. So what stocks should I buy? I get that sort of question. I have 1 million naira. What stocks should I buy? I get it all the time. And it just shows this same challenge of unclear purpose. Because what some people do, they have 1 million and then they spread it. They buy with that 1 million, they buy like 15 stocks. They buy like 15 stocks. 800 of UBA, 300 of Mansard, 50 of Okomo, 51 of Unilever. So they own many stocks. That's confusion. That is not diversification. Because owning many stocks is not diversification. I need to drum that into your head, because a lot of people do it. And then eventually you discover how that seriously affects the health of your portfolio. Because if I have 1 million naira, I will put it in maximum 2 stocks. I'll put it in maximum 2 stocks. And of course, those stocks would have a mission. They have a purpose, something, there's a reason. I'm putting it, on those 2 stocks. And then I can continue to consolidate, You don't want to spread 1 million naira across 10 stocks. That's over dilution. That's not diversification. So it's just clutter. Okay? It is asset clutter, because if those stocks move the same way, when trouble comes, then that's a problem. Okay, so the bank stocks, having 10 bank stocks is not diversification, because there are people who have UBA, they have Zenith, they have GTB, they have Sterling, they have all the banks. That's not diversification. Okay, having 5 tech stocks too is not diversification. 3 hot tips from the same market is not diversification. So a portfolio doesn't ask, how many stocks do I have? That is important. That's not the question that a portfolio asks. It doesn't ask, how many stocks do I have? Do you know what a portfolio asks? It asks, what happens if this part of the world breaks? What happens if the banking system has a crisis? What happens if the tech stocks all collapse? But then all my 10 stocks are tech stocks. So these are the kind, that's what a portfolio, that's the question a portfolio asks. A portfolio doesn't ask how many stocks do you have? And then some people will say, oh, I have 20 stocks. I bought 20 stocks. Quite a percentage of the market. I bought 20 stocks. And then you ask them, what is the size of the whole portfolio? They say, okay, it's 800,000 naira. That's not a very good portfolio. So a good one asks, what happens if this part of the world breaks or collapses? So now, true diversification, therefore, is about behavior under stress. Behavior under stress. That's what true diversification means. So you can ask yourself, for instance, what happens to my holdings if interest rates rise? What happens to them? What happens if inflation stays stubborn? You have to ask those questions. What happens if the local currency weakens, like it happened in Nigeria about 2-3 years ago, when the US dollar went from about 600-700 naira to the dollar to 1,500. At some point, it even climbed to 1,700. All these things affect the quality of your portfolio. So what happens if, for instance, the global market freezes for 18 months? It happened in 2008. So if everything in your account answers those questions the same way, you don't have diversification. What you have is duplication. So this is why some people say the market wiped me out. Have you heard it before? And it's a very common language in the crypto world. So the market wiped me out. While others say this season didn't favor me, but I'm still standing. So same storm, but different ships, different outcomes. So here is where it gets interesting, because even people who diversify still miss reason number 3. And what is reason number 3? You never decided a time horizon. So every price move feels personal. So you never decided a time horizon for your investment in a particular stock. So this one is very subtle and dangerous, because most people never decide how long each part of their capital is supposed to work. So every time the market moves, it feels very, very personal. And that's why you find people who are always constantly checking every single day. They are checking, how did my portfolio, did it rise? How much was added? How much was subtracted? So every market move feels like a verdict on your intelligence. So a portfolio has layers of time. Some money should not care what happens this year in your portfolio. Some money should not care what happens next year. Some money must never be boring on purpose. So when you mix your long-term journey with short-term expectations, you create emotional chaos. So people will come, they say, oh, I have my school fees and I'm going to pay it in 3 months. What can I buy today? So you're trying to mix long-term money, a long-term opportunity, a capital, with short-term expectations. And some people say, oh, my house rent, I have my house rent. I'm going to pay house rent in another 5 months. Please, can you tell me what I will invest now so that that money will double? So that when I pay my rent, I'll still have my capital. So you're creating emotional chaos for yourself. Now, and then you panic over everything that happens in the market. And what usually happens is you find yourself under pressure to sell your winning stocks. It happens. I don't know whether it has happened to you. You find yourself selling your winning stocks, and then you're keeping losers too long. It happened to me a couple of years ago. Particular stock I should have disposed of. Now, but it's not because, when that happens, it's not because there's anything wrong with you. Okay? But it's because you gave money the wrong clock. You gave your money the wrong clock. And then if you're thinking about stock market, you have to disabuse get rich quick from your mind. The easiest way to be hurt in the stock market is to approach it with a get rich quick mentality. That's not what it is. And even for people who do day trading, there's consistent research. If you search online, you'll find consistent research with consistent outcome that people who invest over the long term, over 5, 10 years, 20 years, always do maybe even 3 times better. I forget the particular number. Do 3 times or more better than people who trade. They trade every day, especially like, in the US stock market and all that, where a stock can rise, 20, 30% in one day. But in the Nigerian stock market is capped. A stock can only go up a maximum of 10% or go down a maximum of 10% in one day. But some people trade, and then sometimes they tend to make, it looks like they are making a lot of money. But when you actually allow your money in the stock market to compound over time, so there are stocks I bought 21 years ago that I have not sold. There are stocks I bought for the children when they were like 3, 5, 7, and it's not been sold up to today. I remember a bank we bought at 2 naira. As of today, that bank is trading at 40 something naira. So it compounds over time. There's capital appreciation, not counting all the interest that have been paid on that investment so many times. Okay, so this is why 2 people can own the same stock. One feels calm while the other feels tortured. Same asset, but because they have different time horizons. And this leads directly to the most common silent killer of portfolios. The reason number 4. I don't know if you can guess what it is. The reason number 4, you never designed rules, so emotions run your portfolio. Emotions, two-edged sword when it comes to investing. So if I logged into your investment account today, for instance, can I see the rules? Can I see rules? Not intention, not vibes, not, rules. Can I look at your portfolio or your investment and see rules? Rules like, when do I add more? When do I stop adding? For instance, it's a rule. Like when I started, I had the rule. My first rule was take all my shares, all my stocks, take them to 10,000. That was the first rule. Then when I took everything to 10,000, the stocks I chose, then I will start aiming for 50,000. When I took them to 50,000, I will start aiming for 100,000. When I took them to 100,000, I will start aiming for 500,000, then 1 million of each. And so when you look at my account, you will see that rule. You will see that rule. So you see those ones that have done the million. You see the ones that are pursuing 500,000. You see the ones pursuing 100,000. You see them. You see the ones under $10,000. And so, because there's a rule, I know I need to take the ones, like there's one right now that is 3,000 units. Sorry, I don't mean $10,000, 10,000 units of the stock. So there's one that is 3,000 units right now. The rule says I should move it to 10,000. I aim to move it to 10,000. So those are the kind of rules. When do you stop? When do you add more? When do you stop adding? When would you reduce exposure? What would make me reduce exposure to a particular stock? So I have rules like that. So I look at the fundamentals of the company. I go to the corporate disclosure website. I download the reports, quarter reports, annual reports. I look at it, I look for signs of stress, you know. So I have rules that can let me say, limit your exposure. And I also subscribe to some services. I pay for some services like ProShare, like investing.com, because in investing, you need data, you need intelligence. You don't just want to be going to social media and, listening to influencers. So what will make me reduce exposure? What would make me exit completely? I've exited some companies, some really good stocks, they were good in the days at the time I started. But when they triggered my rule, I exited. So most people don't have rules, and when you don't have rules, what are you left with? Reactions. And so the worst thing is to try to run your investment by emotions, by how you're feeling, by your mood, so you buy when you're excited and then you sell when you are afraid. Has anybody here actually sold a winning stock and then only to look back and then regret it because you sold like this week, and then in another 2 or 3 weeks or 1 month or even 1 quarter, that stock that you sold for, you sold at 16 naira, all of a sudden you see it doing 80 something. That thing happened, it happened to me actually in UACN. I have bought UACN last December at 23 naira. By January, February, it went to 36 naira. So I exited at 36 naira around January or March this year. Now, as I'm talking to you, that same UACN is almost 90 naira. It's about 87 naira or something like that within 1 year. I exited at, so if I had kept, and I held a significant holding, if I had kept that, what I bought in December at 22, 23 naira, exited at 36, today is 87. Like 7 months or 8 months after I sold it. Has it happened to anybody here? I'd like to hear your stories. Okay. Okay, yes. So Bami also says, I thought I made great profit with Vitafoam. I regret selling it. Exactly. It happens. Yes, and Augustine says, I sold MTN when I bought 170, sold at 280. Now MTN is over 500. Exactly. Amwa says, I sold Mech & Co. in USA stock at $80. Now it's around $100. Okay. And then Bami says, same as Guinness. It's almost 300 naira. Absolutely. And Festus says, I sold UBA at 8 naira, but today it's around 40 naira. So this is what happens to all of us when emotion slips. It happens to the best of us. Like I said, what you're talking about, it happens like best of us. But you see, that's what happens to us when it is not a portfolio, when it's a collection, and when emotions run our investment. So sometimes we are too excited. Oh, this thing has really done well, and then we sell it. But you see, now you sold a stock at 8 naira, and then that stock is doing 40 something naira today. There's a way it makes you feel. So that is not investing. So that is emotional outsourcing. So a portfolio is generally boring by design. I think Warren Buffett says something. I don't know the exact, I can't quote him for word to word. But, he buys boring businesses. And often he buys it when nobody's actually talking about it. And then he holds it for a long time. So a portfolio is boring by design, because boredom means that decisions were made in advance. That's what Buffett does. He holds at any particular time a significant amount of cash, and then he's always looking for opportunities, that other people are overlooking at that particular time. He does a lot of fundamental research, So he practices what is now known as value investing. So he buys a company that's boring, that nobody is looking at that particular time, and then, he holds it forever and it does very well. So this is why professionals look calm in chaos. They are not smarter, they are just pre-decided. And now we come to the deepest reason of all, the one most people never think about. Reason number 5. You build holdings, not a system. This one demands that everybody write it. You build holdings, not a system. So the question is, are you building a holding or are you building a system? This is a big one. So a portfolio is not, like we've established, it's not a list of assets. It is a system of decisions over time. This should be an aha moment for somebody. A portfolio is not a list of assets. It is a system of decisions over time. Remember, I keep talking about systems. Perhaps nobody talks about systems as much as I do in this part of the world. Do you know why? Because most of my audience, of course, I have younger audience members, like some of you listening to me who are in your 20s and then who are in your early 30s. But my key audience, like 80% of my audience, are 35 years and above. So because of it, I've done a lot of work with people in their late 30s, in their 40s, in their 50s, in their 60s. And when I started this outreach, when I was asking myself how I was going to help, especially Africans, Caribbeans, and then Africans in diaspora to get a grip on their money life, because our money lives easily mess us up. We are good at other things. Some of us are very good when it comes to spirituality. Some of us are very good when it comes to our relationships, to our parenting, when it comes to academics, when it comes to our career, we are really good. But we are being messed up. I don't know whether there's anybody here like that, because I was exactly like that. My finances were messing me up. It was so easy to cast out demons. I cast out tens of thousands of demons, and I still cast out demons today from people easily, without drama. You don't do all this drama, pour olive oil, shout, spit, dance around. No. It's a sign that follows me because I believe, in Christ. So it's no big deal to pray for the sick and then they get healing. It's no big deal to pray. It's no big deal, to love my family. It's no big deal to train my children. But my finance messed me up big time. It was a big deal. I was working in Shell, then later in Chevron, and then later back to Shell, earning lots of money, but I was struggling financially. So I found that so money was embarrassing me. At some point, I couldn't pay rent after I quit Shell. Money was embarrassing me. I couldn't pay rent, and I got quit notice, from my landlord at the time, and I had to leave. Money was messing me up. I don't know whether it's only me. Am I the only one? I need to know if someone else's money is messing you up currently. It has messed you up. Couldn't pay school fees. The schools will write me, some kind of letters, and I just felt so embarrassed, with myself. So when I started, I found that many people in their 40s and in their 50s still don't have a grip on their money. Okay? Still don't have a grip on their finances. Then I did some research. I discovered that there were 3 root causes for why people 35 and above, people in their 40s, in their 50s and 60s struggle with money. 3 root causes. And I discovered that if I could help these people in that demographic solve these 3 root problems, that people will experience financial freedom. And it has been happening since I started, because many of you send me messages, you DM me, you tell me how the way you look at money has completely changed since you started associating with this channel. And many of you have made so much money. Some of you in the Financial Fitness Challenge, have made so much money from the recommendations I gave you. I still remember some of the stock recommendations I made in May, At the time I made recommendations, for instance, I recommended ICO insurance. At the time, an ICO was at 1 naira 60 kobo, 1 naira 64 kobo at the time. And then some of you bought millions. Like, I encourage people to buy more. So instead of, spreading your money over 20 something shares, so you can follow the kind of plan I used. First, when I select top 5 great stocks diversified in different industries, I say, okay, now I want to take it to, first of all, 10,000. That's the first goal. Take everything to 10,000. The next level, 50,000. The next level, 100,000. The next level, 500,000 each. The next level, 1 million. And after 1 million, the next level is 5 million. So I have some stocks that are pursuing 5 million. I have some pursuing 1 million. So in that order, because remember, what we're discussing is that a portfolio is a system of decisions over time. So now, I said there were 3 root causes I discovered that people in their 40s and 50s and 60s struggle with money. And when I mention it, if I mention it, you can confirm in the comment section, especially if you're in that demographic, you're 35 years and above. And let me know if this is what you're struggling with. Number 1, low financial literacy. I went through school from nursery school to postgraduate college. Not once did any of my lecturers, did any of my teachers, anyway, not once did they teach me how to make a living. Not once did any of them tell me about, tell me anything around financial literacy. No, I'm talking about units. Colawole is asking whether I'm talking about units or amount. No, I'm talking about units. So like when you start, you can say it for yourself, depending on how much you're beginning with. You can say, all right, I'm going to start, I'm picking like 5 high quality stocks, depending on the amount of money you have. And then I say, all right, I want, my first objective is to buy 10,000 of each. You can say 5,000 of each. Start from where you are. You can say 1,000 of it. Start from where you are. By the time you now finish buying 1,000 of each, because it's a marathon, it's a long-term journey, so you don't run. Just take your pace. You can now say, next level is 5,000. Okay. Then you can now say next level is 10,000. See, because the more you accumulate, is for instance, a company pays 1 naira dividend. If you have only 500 of that, 500 units of that company, then you are going to get 500 naira. So instead of having 500 in 20 places, which will give you like 100,000 units, if you have it in one, that is already 100,000 naira dividend that you get. So that's why you want to plan it sequentially like that. Plan it logically. You start with 1,000 depending on your money. But if you have big money, you can start from 10,000, or you can start from 100,000, then 500,000, then 1 million, then 5 million, then 10 million units. Because you see, in my own portfolio planning, I have seen certain stocks that if I hold 1 million of each, I could retire forever. I do not have to work. So all the things I have to do in life, all the purpose and then the tasks and goals that God designed for me here, I will be able to fulfill them. So I have my goal of some of those stocks. And then if you like, I can confide in you and give you one, because there's a stock that if you hold 1 million of those stocks, you will never worry. In fact, even to the second generation, you will never worry about money. To the second or third generation, you will never worry about money. This is how to plan. Okay, so let me go back to the 3 reasons why people over 35, people in their 40s, 50s, and 60s struggle with money. The first one is low literacy. And I was just telling you how throughout my time in school, in the formal school system, nobody ever told me about money. Nobody. I was a good student. Some of you who were my old classmates who are probably going to watch this after, you can confirm Federal Government College Akigwe winning prizes for the best student in class. Then in the final year, I won prizes, best student in English, literature in English, and best student in statistics. I was good. In the university, I was good. But you see, they never taught me about money. So all we knew was just to come out and then start applying for job. You know, just come out and then start applying for job, which is what I did. And so I started working, I started earning money. I had no idea, I had no financial literacy. So I did not know anything about investing. I didn't know anything about the stock market. I didn't know anything about real estate or any of these things. So I ended up broke, even with a lot of money. So that is low financial literacy. That's the first one, low or poor financial literacy. The second reason that people in their 40s and 50s and 60s struggle, and then sadly, many will struggle till their grave. Very sad, because it is happening every day before us. That second reason is that they don't participate in the financial markets. There are 4 major kinds of markets, and then most people play only in the labor market all their lives. But there are 4 markets, and out of these 4 markets, the financial markets carry the day. That's where the big boys play. That's where literally all the money, the trillions of dollars, exchange hands across institutions, across corporations, across governments, across countries, across people, every single day. Trillions, financial markets. But a lot of people, for 60 years of their lives, they are 60, all they know is the labor market. They came out, applied for a job, they got taken. And that's where they've been working for 30 years. And from there, they will retire, never tasting the financial market, the joys, the possibilities, the power of the financial markets. So the financial markets, that's where you have money market funds, that's where you have the ETFs, that's where you have the stock market, that's where you have the bonds, the treasury bills, that's where you have the cryptocurrencies, that's where you have Forex. These are really where these are the places the action is happening, where you can't really be wealthy without playing in that market, in the financial market. And then all the wealthiest people in the world that you hear about, they are called wealthiest people in the world. Whether it's Elon Musk or Buffett or anybody, all of them are playing in the stock market. Now they say that Elon Musk is the wealthiest man in the world and that he's worth about $400 billion. Do you think he has that money, like cash, somewhere in the bank or in his house? No. It's the financial market. It's the shares. He shares in Tesla. He shares in SpaceX. All those things. That's where the valuation comes from. You know, and then if you come to Africa and then you're hearing Dangote is this, Dangote. It is shares. Dangote is rich because of financial markets, even though he has physical businesses. But these physical businesses were brought into the financial markets. They are trading in the exchange, and that's how the man is making a hell of a money. There's the BUA cement guy, who's the second richest man in the country. Is financial markets. And then the other day, 2 years ago, I had a meeting with Jim Ovia. You know, I'm not trying to do name dropping, but I'm really proud of that guy. I'm really, really proud. Quiet, very quiet, but very brilliant man. And always at the background, but, you know, it's moving things. You know, he made 15 billion naira, dividends only, that year. in one company, 15 billion dividends. That is the financial market. That's a part of the financial market. No, but so in your labor market is limited. You can only make this much in your labor market. What HR says you're going to, that's what they call a salary. That's all you get. That's all you get, that salary. And then maybe every year or every other year, they raised it to 2% or 5. And nobody cares that inflation is eating up the purchasing power of that your salary. And it's capped, so your fellow man says, this is how much you're worth. And this is how much we're going to pay you. That's it. But in the financial market, there's no limit. There's no cap. You determine how much you want to earn. And that's why you need financial intelligence. And that's why you need a kind of coaching that I do for my mentorship group. If you want to join the Financial Fitness Challenge, especially as we are beginning 2026 in a very, very clean note, the Financial Fitness Challenge is my wealth mentorship group. The details are in the description of this. You can join. You can join. Because I know that many of you, a 58-year-old, came to me, not long ago. And he said, oh, boy, I have worked for, he said like 30 years or something. And he said he doesn't have anything to show for it. And I asked him, tell me about your portfolio in the stock market. He said he does not have any single stock at 58. How could you at 58? All you've known is job market, labor market. And you do not have a single portfolio. What are you going to hand over? What legacy are you going to leave for the children's children? King Solomon said that a good man leaves inheritance for his children's children. At 58, you don't have one single share. You don't have one single company that you're invested in. It's just salary, and then you're hoping that pension will be okay. And let me give you the bad news about your pension. Many people are living up to 95, 90 years, 100 years. I've been shouting it in recent times because I know that the data will tell you that life expectancy in Nigeria, for instance, I think is 55, 57%. Somebody should check and then tap in the comment section. Let me say 57%, 57 years. People are living till 95. We buried the other day a 93-year-old. My mother-in-law herself lived till 95 years. There are men. I saw a guy the other day, in fact, during the burial of the 93-year-old, and then somebody told me that guy was 80-something. I couldn't believe it. He was so straight, so strong. So now, you do not have any investment. And then when you retire, it's likely that you're still going to be here for another 30 years, 40 years. You are going to be here for another 35 years. And you do not have investment. So what are you hoping on? Okay, just hoping that the children, but you can't predict the future. The children themselves, because times are changing as well. And then the children themselves are struggling. Now, what happens if you take ill and you need to be flown to the US or to Germany or to France or to Saudi Arabia or to Thailand or to China for treatment? How are you going to pay for it without your pension? How are you going to pay for it? A man like that guy at the time was in his 50s, approached me as I was jogging in the neighborhood. And he said that he was pleading with me to give him money, that he had diabetes, and that his drugs, I don't remember how much he said his drugs were cost, but one big amount of money, like in 1 week, 30,000, like that. Meanwhile, this guy doesn't do anything. He just sleeps in the church, in the neighborhood. No job, nothing, no investment. That guy should be in his early 60s. I said, okay, I'm going to give you to fill your prescription this one time. But what's going to happen for the other 12 months of a year? What's going to happen for the next 2 years, for the next 5 years? I said, there's no way. I can't be paying. And then how many people are you going to be meeting by the side of the road to beg to fill your prescription? No. So, if you're in your 40s and 50s, join the Financial Fitness Challenge. It's particularly for you to correct this because it's not late. So that's the second reason why people in their 40s, 50s, 60s struggle financially, and they are likely to struggle to their grave because they are doing the same thing they've always done for 40 years. They are not changing it. And then if you don't do something different from what you've been doing, like beginning to play in the financial markets, then you're going to get the same result you've had for 40 years of your life. Okay? And then there's nothing so sad like that a man in his 70s is ending his life broke at the mercy of other people. And how do you feel when you see these people? They are people's parents. They come to the newspaper. Oh, kidney something, something. Everybody contribute and all that. And then you see some of these old people, and then you're doing GoFundMe for them. That's because that's the only hope. But how many people are you going to do GoFundMe for? To treat? So this is the time to deal with it. Number 3 reason why people in their 40s, 50s, and 60s struggle financially and are likely to do so till they die is that they do not have a system. They have not built a system. Warren Buffett said, if you don't have assets, if you don't have a system that makes money while you sleep, he said you will work till you die. So these are the three problems that I dedicated this YouTube channel to solve for people 35 years and above. These 3 problems. And if you've been following me for a while, I'm sure that you can confirm that that's exactly what has been happening. Financial literacy, financial markets, system. The whole system. If you notice, that's all I've been talking about. And then in the wealth mentorship group, that's exactly what I've been talking about. It's not that I can't talk about other things. You know, it's not that there are no other things to, but particularly for you, because if you don't deal with these 3 things, it does not matter how many prayer altars you join every morning. I'm telling you, it does not matter how much you fast and pray for favor, for divine. How? If you don't deal with these 3 things, if you don't remove them, deal with them, low financial literacy, not participating in the financial markets, and then lack of systems, guy, I'm telling you, it's going to be rough. Your older age is going to be rough. Okay, so now I began telling these stories because I was telling you about number 5, that a portfolio is not a list of assets, it's a system of decisions over time. And that's why I tended to digress a little bit to tell you this. But I don't think it's digression. I'm sure it's valuable to you, right? I'm sure it's still something you wanted to hear. Really? Okay, so let me read a few of the comments. Okay, yeah, the children aren't your pension plan. Exactly. The children aren't your... You're actually supposed to live for the children. Even though, okay, if your parents are still alive, and your parents are still alive, please provide for them. Because it's also a commandment. It's a spiritual commandment to honor your parents. You don't want them, you know. But as parents, we don't want to depend. We just don't want to depend. We can. I know in the olden days, yeah, we grow old and then we say our children are our pension plan. But you don't really want to be a burden. But I permit the children to give, to take care of me, and to take care of your parents, because it's a spiritual law that goes with a blessing. Because these are the people. See, your mother carried you 9 months in the womb. I really get emotional talking about this, because when I see the way some people neglect their parents or treat their parents, it's very sad, especially the current generation. You know, you just graduate, start working, and then you go off, your friends and all that, and then your parents are there in the village. And I'm like, is something wrong with this generation? These people sacrifice literally everything, deny themselves to send you through school, to help you to become something. Your mother didn't buy clothes because of you. Your father didn't buy a car. He was trekking because of you. And then you knew how hard, the kind of stress these people used to be under anytime you and your siblings were going back to school. They would borrow. They would look for money everywhere. They sold their property to send you to school. You graduated and you start working. And then you just go off like that and forget them. No, that's terrible. That's like a curse. You're cursing yourself, So you don't do that. So even though I'm encouraging parents, of course, stand, have investment that can take care of you. But life does happen and then things don't go as planned. Because you can plan, you can have your investment, life can still happen. So you can't and you shouldn't ignore your parents and neglect them. And then I know that in the Western world, children send their parents to nursing home. But I think in the African spirit, that's a horror. That's an abomination. My goodness. You send them off to a nursing home. Then you are there enjoying, cruising, clubbing, drinking, and then your parents are there languishing in a whatever. We don't do that in Africa, but it's fine because it's the system in the Western world. But we don't do that here. And I don't think they do it in Asia and China and all that. Your parents took care of you. It makes sense that you do take care of them. But I'm saying, parents, life does happen. Sometimes the children are having extreme difficulties. So you've got to also have something, to take care of yourself. And also to even support them when things are not working. So a portfolio is not a list of assets. It's a system of decisions over time. And then that system answers questions like how new money enters, how profits are handled, how risk is rebalanced, how exposure evolves, as your life changes. So because without a system, every market cycle feels like you're starting from zero. But with a system, experience compounds, and even the mistakes you make become data. They become data. So this is why some people invest for 20 years and they feel stuck. They still feel stuck. Have you seen people like that? They've been investing for as long, but others feel clearer and clearer and then more confident every single time. Okay? So again, in summary, owning stocks does not mean you have a portfolio. A portfolio is intentional structure applied to money. Okay, so in the next phase of this journey that I will share soon, I will walk you through how to design a real stock portfolio step by step. That's what we're going to do in the stock portfolio masterclass that is coming up. You don't want to miss it, especially if you fall within the demographic I'm talking about. You need to have a solid portfolio. By the time you're in your late 30s, you need to have a solid portfolio if you're in your 40s and 50s and even 60s. That is what that masterclass will do. I'm going to take you through how to do that. And I'm also going to give you a worksheet to allow you do that so that you're starting 2026 with confidence and you're starting 2026 with clarity around build a portfolio. You can build a portfolio in 2026, an intentional, intelligent portfolio, not just a list of assets. Buy this one, I buy this stock. No. Your portfolio is a living document. Your portfolio is like a covenant with your financial future. So it is not something you just an influencer or somebody just says buy this and then you buy. No. And your portfolio can actually give you a lot of confidence and strength, even in the midst of all the challenges that will happen next year. All right. So type in the comment section, what was your aha moment? Or if you have one or two questions I can take before we round off today. But let me read a couple of things that already have here. So Bami says the children aren't your pension plan. Yes, we've read that. And Jude says, you are going to be here for another 30 years after retirement. What are you going to hope on? Fantastic question. And then Bami says the angels will provide for him. Right, the angels will provide for him. Okay, Amwa says, please, what are the types of markets, sir? All right, so there are the four types of market. The labor market, That is where you trade your time for money and you trade skills yourself. That's why it's called labor market. You trade your time, you trade your skills, your qualification for money. So that's the labor market. The second market is, I've already talked about the financial markets. So this is where you trade financial instruments and risks. So that's actually where you trade for all kinds of financial instruments, and that's the financial markets. The third one is where you have your raw materials market, and this is where raw materials, Amwa, I guess from your name that you're from Ghana. So that's where people sell their raw materials like cocoa or rubber or crude oil. They sell it. So that's raw materials market. And so which can also be regarded as a commodity market as well, because in commodity market you can buy grains, you can buy oil, you can buy I think you can buy gold in commodity markets, but you get the point. Commodity, palm oil, all those things that serve as inputs, for industrialization. Now, cobalt, zinc, copper, all those things that they mine in Zambia. And then you now have the finished goods market. So that's where products and services are being sold, the Louis Vuitton of this world, the electronic gadgets, and all these finished products. So those are the four kinds of market. And then do you know what? A lot of people play only in the labor market, and then they wonder why they are not doing well. All right, I hope that has helped. So Kola Wale says, so many aha moments. Yeah, give me some. All right, and yep. Kola Wale says, any faith that totally dependent on God without a corresponding action from you, yeah, it's an irresponsible faith. I agree with you. There's a reason that God gave us our heads and our minds. There's a reason he gives us sound mind when we come to him, when we belong to him. But a lot of people think that that faith means you shouldn't use your common sense, you shouldn't use sound mind. If you shouldn't use your sound mind, why did he say that God did not give you the spirit of fear, but of power, of love? Sound mind. What is that sound mind for? And then he clearly says you should renew this mind, because listen, we live in a mental world. That's why as a man thinks so easy. So God wants you to renew this mind, because you will never, your level of achievement in this life can never cross this thing between your two ears. And that is why you stop watching Netflix and start listening to conversations like this. You pray every morning. There are people who join 3 prayer, they call it altars, every single day. I'm not kidding you. A woman like that, not far from where I'm sitting right now, told me that she joins one at 12, at midnight, finishes, she barely sleeps, then joins another one at 4, barely joins another one at 6, and I think there's another one at 7. You alone, every day, and she's not doing well. Somebody I know, somebody who approached me for help, she's not doing well, but every single day. And then so many of these people who participate in this are sleep deprived. They are sleep, so their lives are confused. When you are sleep deprived, you don't make good decisions, and then you're so vulnerable to being manipulated by these people, because you don't sleep. You pray at 12, then sleep, wake up to pray at 4, then join another one. When do you have time to process your own thinking? And then this is the time that should actually be sleeping, and your body should be healing, and you don't sleep. Now you go to office, you're sleeping, and if you're not sleeping, you're sleep deprived. And yet that Bible you carry says that God gives his beloved sleep, and the time you should be sleeping, you're there doing midnight prayer every day. Not that you do it once a week, every day. Something is wrong with you. What is it you are looking for? And then you are praying this thing. They are not attending this. Meanwhile, if you only take a moment And learn things like this since I'm teaching you. Don't you see how your life will be better? And then all those things, your prayer, you will get it. You apply these skills, and God blesses it, and then you will get those things. Then you can use that other time, extra time, to do something to help people. So instead of pray, give me, you now become the source of blessing that will be given to those people who are praying. Does that make sense? Okay, so great value. All right, and then someone says, Okola says, God does not bless empty hands. Okay, Festus says, so bad. The parents will be begging, but they have someone. It's terrible, yeah, for those people who ignore their parents. All right, Festus says, aha moment, holding stock does not mean having a portfolio. Absolutely. Jude says, your portfolio is living document of your financial future. Plan it. Fantastic. Augustine says, thank you, coach. Please, what else can we do to avoid the losses in a situation like ASO savings and loan situation? Belong to a wealth group where this information, because if you were, for instance, the financial fitness challenge, one of the groups, somebody mentioned it and I shut it down immediately, and then it saved lots of people. Belong to that. Then for every company you want to invest in, do some thorough analysis. Go to investing.com. You can find out a lot. You go to Yahoo Finance, or you go to, there's another one, stock analysis or stock analysis or something. If you search and then you type these stocks, they will give you at least some information you can start working with. Molalapo says you forgot to talk about the 1 million shares that can sell. All right, to be honest with you, I'm talking about Presco. I'm talking about Presco, so I'm just giving you a secret. I'm talking about Presco. Okay. First of all, says a portfolio is not a list of stocks one owns, but a system of decisions over time. Fantastic. Okay, let me read a couple more. Marshall Belief says, your own aha moment, I have to assign a job and set financial goals for any stock I buy. Fantastic. All right. And Tone says, what are your thoughts on Naira mutual funds? I have to check that to be able to tell you. Ebube Africa is asking, what's your opinion about Okomo oil? That's also one of my top stocks. So buy Okomo, buy Presco anytime, any day. You won't miss road. Okay, so this is where we are going to draw the curtain today. Whatever happens, ladies and gentlemen, keep showing up, because you never know what's coming your way next. And I'll see you exactly the same time tomorrow. And don't forget, join that masterclass right now in the comment section. And then if you're not part of the Financial Fitness Challenge yet, if you are getting this for free, you can imagine what you get being in my Wealth Mentorship group. So sign up right now. And then tomorrow we'll continue these conversations on portfolio planning, because I want to prepare you to get you ready for 2026. You need to have a different financial experience in 2026 than what you had in 2025. You know, a more upgraded, a scaled financial experience in 2026. So that's where we will go. So I'll see you same time tomorrow. We do this every weekday, that is Monday to Friday, 8 p.m. GMT West Africa, Lagos, GMT +1. All right, so I'll see you same time tomorrow. Good night and God bless you.